Use risk capital you can afford to lose if you are playing this game. E for eMoneyWizard.com and MarketWizards.com. Looking at a bigger chart. And I'm reminding traders of both persuasions, long and shorts, think small. If you're ultra conservative, don't even trade right now. Stay sidelines and relax. If you're an aggressive trader, typically the short side half gap trade is a bread and butter trade of ours. I think it's suspect today to get too much. If we get to the half gap, I think we've done well. I told you before, 82, 81, make sure you're paid. I'm still feeling very conservative about an agenda today. So I think pullbacks will get bought. And you can see where traders got caught here. So in any event, this is our resistance zone, this is our fighting box, and this is our support box for now. And I think inside day with a couple of, reverse type swings back and forth, little choppy type action, probably makes the most sense. We have trapped traders. The question is, can they be squeezed further today or not? The overnight traders have trapped all of these traders from here who got the second leg yesterday. So now we need penetration back underneath this. And the primary target, if we get there, is 78 to 79 and a quarter. Based on Zeke's call of 78 is the half gap. Convenient traders are trying to come short side, not expecting to close the gap or test yesterday's low, just trying to get some skin coming south side in the first half hour to hour. Probably will need multiple entries. And that's because we're fighting rising moving averages. And there are times I've been dead wrong about that idea where we just get a big move, but that's maybe 10 or 20% of the time. So on average, I'm thinking conservatively because the intraday range until we lose the lows is up. So that means pullbacks theoretically can get bought. The contra idea to that, of course, is morning after trend day. We had a big move down, and this is a reactionary bounce. So that's why I believe this is the control area for today, the 78 to 82 area. And there are some times when you don't have the same feel for the location and what they're doing because of the overnight push in low volume. So we got the right area for shorting. Now the question is there anything more to be had? $79 and a quarter, $79 and a half area, bing, right there. Stops down. There's our angels and demons. And again, I'm considering very aggressive traders are going to try to defend this 78 to 77 today. So I am thinking small and willing to miss parts of trades today. Looking back at the middle, this is our middle for the overnight range. If you've got this, make sure you lock something. I think we're going to need several entries today. And aggressive buyers that want to try head of the gap, just use a 2-point stop from your entry. So we can see this is the pipe. We're still trying to teach the concepts of the system that we are using. Supposedly 40% of the time the market will spend inside the pipe. And the pipe is one level above and one level below the middle. And then the next level below or above theoretically becomes the next resistance or support. And that's why there's 89.5. We're using that, calling that 90. Using this area, 92 to 88 as our resistance zone. And back here, we're thinking conservatively, saying you got to bust half gap. And obviously this 77, all important. And I'm still thinking somewhat neutrally. I think this was a protective move by the boys, throwing it up here. So it's not like, as I posted in the room, it's not like I'm fanatically bullish. I just think we need to be careful overthinking and try to grab our 2 or 3 or 4 points here and there. You know, it's the guys that always swing for the fence that wind up digging a hole. If you can risk 2 and you can make your 4 or 5 points, good heavens, do it. Here's our 15-minute chart. Notice how we're come right back down into the rain line here. And it's held the first time. So I think it's going to take multiple entries today. And if we can get back, notice where the pivot point is, 77.25. So this is what I'm labeling right here as our breakout. Third time through, right? 1, 2, 3. Right back here near 76. Now, this is a 15-minute chart if you want to look, and that's our base chart. Here's our 5. And if you want to look at something like a 30, you can see how we pounded underneath it, and then we reacquired that. And off to the races overnight. But still have stalled back here. A lot of head fakes in this game, no doubt. And I said I expected a somewhat choppy open. I think that's what we've got right now. Don't overthink markets. Just try to pick the immediate range and try to guess and throw away the top and throw away the bottom and try to understand where the core range probably is. You know, I mean, that's a high odds range you can see going back a few days. Not been able to bust the lows. And we had one poke up above and then a sharp sell. Not a lot of news. So it makes for a challenging type environment. Hey, here's an RTH chart, a 2-minute chart. Obviously, a faster chart. Here's your double from yesterday, then the scoot into the close. and we can just see how tight this range is, about a 5-point range right now. And for some traders, you don't even want to trade right now. If you're an aggressive trader, You're going to try to get your couple of points. But if you're a little more conservative, you really want to try to understand where your odds are best to get more than risk two, make two. And you can see the challenge right now with the rising moving averages on a fast chart. Why I think it's hard for the shorts to get type of trade that really love to get. That was yesterday. We need more time. We've got to allow these to catch up. These are fast. Reminder, anybody that's risking two, if you've jumped in and said, I'm going to try it alongside, same odds, basically, the long side as the short side. Risk two, make two. Use a 2-point stop if you're playing. Got the scene of the crime just above us. Got the gap. And I think this is a squeeze type trade more than anything. A day like yesterday, if you were following something like this until we'd said be very careful about overstaying later in the afternoon because they'll want to take profits. You can see this pattern right here, green and red and blue. And then the end of the day, make sure you're paid, go sidelines, bang. They trap a few shorts and they've been squeezing them ever since. Here's where your squeeze came from right here. Let's just do let's put a rectangle. This is your overnight range right here. So here's where your squeeze has come from right here. And this is to demoralize the shorts. There wasn't any news that I could see that would warrant this type of a push. Zeke had already posted in the room, be prepared for the typical BS stuff today. So if you have no allegiance to either side and you just try to trade what you think is the agenda, you'll probably do better off. This is what I meant by rising moving averages. That's a 1. So you want to scroll and see a couple of different ideas. You can't see anything pushing this right now. So we're way ahead of ourselves on a 10-minute chart. So that's why you drop back if you're using RTH to something like the 1 or the 2. Squeeze type trade. Still not expecting a big trade this opening swing. Don't fall in love with your trades today. Retesting scene of the crime, 85.5. So based on this chart, we want to make sure we're paid by 85.5, and then good fortune above. And if you bought with a couple of points stop, and you have a trailer, up to you if you want to maintain it for a little bit, but for sure, make sure you are paid by that 85.5. And then we had suggested green, yellow, based on yesterday's range. So that's what we're doing. We're saying that range is supportive. This is our fighting range. And we're saying this range right here is our next resistance zone based on the information we have available right now. So this is side by side with yesterday's range. A very important chart for me. Any second entries? Short side today. Still thinking small. We've had a thrust up, which means pullbacks theoretically can get bought. And obviously, buyers were active at the middle. And this is hard for most traders to turn their mind around and say, you know what? If I can get a little something short side, I want to turn around and see if I can align with the trend of the day. And there have been times when the trend of the day gets completely reversed. That will surprise me today if they do. So I'm going to keep my mind as neutral as I can and think inside yesterday's range is the game today. And I want to think in small ranges. And by small, I'm talking about a 5 to a 10-point range. Focus on those type rotations. Here's a 2-minute chart. Here's a 3. And the market has to pull back underneath the green, the red, and the blue. Unless there's some news event, I think the morning after trend day idea today does not have as much validity as you would normally think. Just my personal opinion. If you bought that 81 to 78 area, stops up. Anybody taking a second entry today short side, don't be too aggressive because right now the squeeze is still on. We've got a gap at that 87 area. That's this line right here. And you can see how, oh, we're crashing, and then you get the rising moving average catch it. Do not be surprised today to see the high get taken out. Then we will see how much further they have in mind, because a lot of tail up here the other day. The goal of the boys, of course, is try to knock out all the shorts before they come back. Everybody's still thinking that high is in at 28. It may be, but I'd be very surprised if it is. We'll know a lot more by the end of the day today. Anybody that's played for the gap side up here, with what we had suggested earlier today. Think of 78 to 82 support zone. Make sure you're paid. And good for you if you've turned your mind around from yesterday.